For those of you that don't know me, my name is Terry Lauk, and I'm the Director of SBA Lending for Valley Partners. I've been here just shy of 10 years and will be your tour guide for the next 30 minutes. Before we dive into the SBA 504 refinance program, I'd like to turn it over to Tom Sangrick from the SBA Cleveland District Office, just to talk to you a little bit about what the SBA has been doing for the last year.
Okay, can you hear me?
Yes, Tom.
Okay, I'm just going to talk a few minutes here. Got to get back to Terry, just keep it under 30 minutes. So I'm just going to talk about SBA. We've had a record year this year, an unbelievable year, with the PPP loans and the EIDL loans, along with our regular 7A and 504. Just to give you some stats that we just got. In the Cleveland District, we did 70,000 PPP loans for $8,779,000,000. EIDL loans, we did 40,000 EIDL loans in our district for almost $2 billion. We did these advances where it's the money you don't have to pay back. Almost 130,000 for $479 million. So basically, in Cleveland District, we've done 111,000 loans this last fiscal year for $11,500,000,000. So we've been overwhelmed with loans this year, and we're trying to get back to doing regular 7A and 504 loans. Last year we had 59 504 loans. We'd definitely like to do better on that. Take advantage of the refinancing Terry's talking about. But I said SBA's been in the news a lot about the PPP loans. I think we've done overall 500 billion of the PPP loans nationwide, 11 million, $500 billion, dollars, and then the EIDL loans, I think we did 11 million of those. So I know a lot of you banks have been involved doing the PPP, and we thank you for sticking in there and helping people out. And there could be another round of stimulus if Congress ever gets together. I mean, they keep talking about it, which could be more PPP, which had a banker, I've seen her in the grocery store. She says, no more PPP, no more PPP. So I guess the banks are overwhelmed by the PPP loans somewhat, but there could be another round of that or stimulus. So we have to wait and see what Congress figures out, because there was money left over. It was 130 billion left over in the PPP from the last round. So they got to figure out what to do with that. So hopefully they'll put it to good use and help the bankers and public, use that money in order to spur business here. But would like to do more regular 7A loans this year and definitely more 504 loans. And like I said, we got, Mahoning Valley, or I guess Valley Partners now, have been a great partner with us for 30, 40 years, since I think 1980, close to 40 years, maybe 38. Valley Partners also does community advantage loans, or banks that aren't quite bankable yet. They can do it. It's an SBA loan, so take advantage of that. If you have somebody that's not quite bankable, call up Terry or Teresa, and maybe they can do a community advantage loan. So I don't want to take up too much time. Is that good, Terry?
Yes, Tom, that was great. Thank you.
Okay.
How many are you familiar with the SBA 504? If not, it's okay. I'm going to give you a brief summary before we review the 504 refinance program. The SBA 504 is a fixed rate financing tool that focuses on business expansion and job creation. The 504 can be used for owner-occupied real estate and long-term equipment purchases. This is a fully amortizing loan with terms up to 25 years and fixed rates, which right now are at historic lows, hovering around 2.5%. The program can also reduce your equity requirement to as little as 10%. The 504 is a participation loan. As you'll see on our graph, The bank finances 50% in a first position. The SBA can finance up to 40% in a second position. And then we look for an equity injection as low as 10%. Today, this webinar will benefit not only lenders, but economic development professionals, small business owners, and CPAs. This is the part of the presentation where we put our swimsuits on and dive into the 504 refinance program. As you see on the screen, there are two separate programs. The first is a refinance with expansion, and the second is the refinance without expansion. They're outlined in depth on pages 462 and 472 of the new SOP 5010-6, in case anyone wants to take a more in-depth look. Most folks aren't aware of the programs, but there are powerful tools that can help with cash flow by extending terms and lowering rates. They also mitigate bank exposure with the participation aspect. The 504 refinance with expansion allows you to refinance up to 50% of an eligible expansion project. There's a couple of key items here. 85% of that original debt must have been used for 504 eligible items, and the remaining 15% must have been used for the small business concern or the borrower. The original debt must be a commercial loan, and the debt has to be collateralized by fixed assets. When looking at the 504 refinance with expansion, you can refinance existing 7A, 504, seller notes, and same institution debt. You can also include multiple loans and locations in the refinance. To be eligible, though, we must make sure that we provide a substantial benefit to the borrower. That's a savings of 10% of your monthly payments, or if the loan has a balloon payment, it's automatically eligible. The debt also must be current. When looking at the 504 refinance with expansion, the borrower contribution can be existing equity in the real property. However, an appraisal is required to substantiate that equity. In the case of debt exceeding 50% of the expansion project, we have a couple options. First, if it's the same location, any debt over 50% can be included in our bank's first position mortgage. If the property is at a different location, any debt exceeding 50% can be refinanced by the banking partner in a subordinate or third position. Debt owed to an associate is ineligible. Then SBA considers an associate an officer, a director, a key employee, an entity owner, or a controlling individual. With your application, we'll need copies of your most recent debt and lien instruments, your payment history, transcripts, and existing loan documents. We'll also require borrower certifications for the refinancing. Moving on to the 504 refinance without expansion. This is the newest addition to the SBA refinancing program, and it allows you to do a standard refinance on an existing commercial loan. The applicant must be in business for 2 years, and the debt must be at least 2 years old. Again, the debt had to be incurred for the benefit of the small business. However, in this program, the debt cannot be subject to a federal guarantee. In addition, you have to be current on all payments for the past year. To be eligible for the 504 refinance program, again, the debt must be a commercial loan where 85% was used for eligible fixed items and 15% was incurred for the small business. The debt could have been refinanced multiple times. What we have to make sure of is that there is no portion of the debt that was not used for the small business. An example of that would be if the small business had a loan that they used for tenant improvements for an entity that they leased to. Under this program, you can include cash out for operating expenses. It's limited to 20% of the loan to value and must be incurred but not paid by the applicant or due within 12 months of the application. Our loan to value limits for this program are a standard 90% loan to value or an 85% loan to value when looking at eligible business expenses or cash out. Additional fixed assets cannot be pledged to increase the cash out request, and the cash out is limited to 20% of the loan to value. Some items that are not eligible would be considered capital expenditures and other business debts not listed in the SOP. When we are looking at the refinance program, all regular 504 criteria apply. The property must be owner occupied. We have to meet the job creation or retention goals, or we have to meet one of the economic development objectives or community development goals or public policy goals. The loan also must be dispersed within 9 months of approval. Items required for the 504 refinance with expansion at application include current debt and lien info, such as your promissory note, your deed, your UCC filings. They're also going to require documents supporting that 85% of the original debt was for an eligible asset under the 504 program, and that 100% of the debt was incurred for the applicant. A borrower certification is possible. We also have to make sure that the 12-month payment history prior to application is current and that we meet the substantial benefits test. That's the 10% reduction in payments or the existing loan has a balloon. The lien also must have been in place for the preceding 2 years. When looking at the 504 refinance without expansion, again, we're going to need lien verification. We have to verify that the lien's been in place for 2 years. There's the 85% eligible fixed assets rule, and 100% of the debt, again, must have been incurred for the small business applicant. And again, borrower certification is permissible. When you're looking at the eligible business expenses or the cash out, an itemized list supporting the request must be supplied. And we also have to have a 12-month payment history. In addition to this, any deferment that was granted must be brought current before the debt is eligible for a refinance. So if your borrower was deferred at any point this year, however long those deferment payments were for, must be paid up and the loan brought current under the original agreement of the loan terms. I wanted to give you guys a high level of the 504 refinance programs. If you have general questions right now, we'd be happy to entertain them. I would ask that if you have more specific project direct questions, please contact me directly, either via email or phone.